Good afternoon. Well, the Aussie share market had a bit of a soggy Weet-Bix today, and it was on from a sour day from the get-go as traders were hesitant of the new UK Brexit deal being passed through Parliament on Saturday. So how that unfolds remains to be seen. All sectors today were in the red, closing lower. We finished in entirety with a loss of 0.5% following that 0.8% haircut yesterday. So all in all, we were left with a weekly gain of 0.7%, but we did gain less than last week. And we also gained less than Wall Street, showing our divergence, or that we aren't following the same tune. But now let's pause on the big news of the week before we look at what happened in our trading session. Well, after the market closed, WiseTech Global responded to the short seller allegations, saying it did not overstate profit, did not overstate growth or revenue, and that all of its accounts are accurate and not inflated through acquisitional accounting. This is, of course, contrary to JC Capital's short seller report, with JC Capital saying its revenue and profit was fake. They sounded very Trump-like. Really, as JC Capital said from the get-go, that they wanted to profit from the share price drop. Yesterday, we saw WiseTech's shares fall by $3, wiping off $1 billion of market value for WiseTech. So we'll be watching this closely on Monday when they kick off trading again. Back to today, as we said earlier, all sectors closed in the red today. But if you did look at your super balance and you do have a diversified portfolio, you'd see that you are in front. That's because the benchmark S&P ASX 200 is just points away, or about 3% away from all-time high territory. Today, miners fell the least. Rio Tinto rose the most among the heavyweights. Among financials, CBA fell by about 50 cents. Telcos stayed under pressure amid the looming inquiry for the NBN wholesale charges, while staples fell the most today after Treasury Wines and Coles lost about 1.6%. On the company news front, St Barbara shares sank about 9%, closing at $2.55. On the gold miners slashing their production forecasts. And what's interesting to note, though, on the week, or earlier in the week, it was upgraded to an outperformed stock by Credit Suisse, which suggested its price target will grow to $3.50. However, just last month, the Royal Bank of Canada tried to warn the market, saying that the miner was underperforming other gold plays on the ASX. The RBC also made the comments after visiting St Barbara's mine in Torquay, Victoria, and RBC said it's because their costs are high and they had very low cash flows. Moving to buy now, pay later, first mover Powerhouse. Afterpay Touch, their shares continue to fall. Today they lost 7%, taking their share price to $29.65. And if you looked at the chart, it looks a bit like a serrated knife, unfortunately, really after UBS downgraded the stock, suggesting its price would halve, completely different to what most of the market are saying, and contrary to what Bell Potter's buy recommendation says. And Bell Potter says there is plenty of positive news to come, and as the company is on the same page as well. The company and Bell Potter say before 2019 is over, the market is expected to hear about new markets that they've gained entry to. The ASX can also expect an update on their transactions as their client and merchant numbers continue to grow. Plus, we'll also get clarification regarding their collaboration with Visa, as well as, of course, receiving the long-awaited final AUSTRAC report.